The story of money and the true face of the banking system. The system expects us to work for life, but no one tells us the rules of the game. Go to work every day, earn money, pay bills, then go back to square one. So, is this really life, or is it invisible slavery? Money is the basis of everything. But to understand how today's digital numbers and paper money came to be, we need to look back. In ancient times, people exchanged goods, but this system was impractical. Over time, societies adopted precious metals like gold and silver as the universal medium of exchange. But because they were difficult to transport, people began to entrust their gold to jewelers. In return, jewelers issued certificates, which were then used directly in trade. However, jewelers realized that no one was withdrawing their gold, so they started issuing certificates in excess of the gold they had. In other words, money started circulating in the market that didn't exist. This became the basis of the modern banking system. For a long time, there was a gold standard. Every coin printed was based on a gold equivalent. But in 1971, US President Nixon abolished this system. Now, there's no gold behind money, only the authority of the state and the trust of society. This raises a new question. If money can be printed without limit, does it have any real value? History shows that uncontrolled money printing brings disaster. In countries like Zimbabwe and Venezuela, hyperinflation wiped out people's savings. As a solution, people turn to foreign currencies or cryptocurrencies. But do big economies behave differently? Actually, no. During the 2008 crisis and the 2020 pandemic, the US and Europe printed trillions of dollars. It stimulated the economy at first, but then inflation spiked. Most people think that governments print money, but nowadays money is mostly created through debt. Governments sell debt paper. Central banks buy it and create new money in return. In this system, if borrowing stops, money stops flowing. So new debt is constantly being borrowed, and the system continues in a cycle. Commercial banks work in a similar way. Alex deposits $100, and the bank gives 90% of this money as a loan. But Alex still sees $100 in his account. So the same money is offered to two people. If everyone tried to withdraw their money from the bank at the same time, the system would collapse. Because in reality, there is not that much cash. That's why banks want people to be in debt all the time. Mortgage loans, car loans, credit cards, they are all there to keep us in debt. The money we use today is largely an illusion of debt. And this system affects not only our pockets, but also our lifestyle. Advertisements, digital payment systems, psychological manipulations all encourage us to spend more and get into debt. In an experiment conducted by MIT, those who used credit cards spent 83% more than those who used cash. This is because digital money makes spending more painless. Systems like PayPal have recognized this fact and made billions by making consumption easier. As a result, we are moving from living in debt to a fully digitized financial system. Who will be in control? As in the 2011 movie In Time, will money rule instead of time? The question is, do we rule money? Or does money rule us? And if money rules us, who rules it?